All right. Good afternoon, everyone. This is actually the fourth week of presentations this semester. So we're moving right along. We'll have two more presentations, sets of presentations before spring break, and that means we will all, in the class of 2023, be through our first round of AIM pitches. After spring break, rinse and repeat. We'll go through 6 more weeks of student presentations. Today we have 3 international and 1 domestic stock that will be presented. Glad to see the turnout today. Looking forward to your questions. Per our custom, we'll do about 3 minutes of an overview where you'll talk about your screening process and then also some of the key questions that were posted online. And then we're going to open it up for you to ask questions. Dr. Wall today is not with us. He might join us remotely. He's in San Diego visiting his brother at a conference. So we wish him have a good time with the fish tacos and the margaritas in San Diego.
There we go.
All right. So without further ado, Zach, are you ready?
Yes.
Looking forward to it. Thank you.
Thanks. All right. Thank you guys all for coming out. My name is Zach Turbett. I'm a junior here in the AIM program. And so I'm doing Techtronic Industries. And the way I screen for it is through FactSet. I was looking mostly for strong ROE, ROIC, and then just constant revenue growth year over year. Just a couple of things I want to cover before the Q&A. In terms of my boxes at the top of my write-up, if you look at the EPS and PE ratios, those are a little bit wrong. So because this is an ADR, their share price is about 1/5 of its regular share in Hong Kong. So I did forget to multiply that EPS by 5, which would now make it in order from 2020. EPS being $2.20, $3.06, $3.70, and then $4.60. Making the PEs now 36.66, 26.37, 21.79, and 17.53. And then next, there was a question on D2L about the drop in operating income in 2020. And that's mostly just because the price of lumber went up about 25% during that year, fiscal year. Also, Home Depot being Techtronic Industries, or Milwaukee Tools specifically, being one of their biggest customers. During the pandemic, they had closed one of their biggest factories for 2 weeks, and then they adjusted their operating hours. Also, supply chain was a big issue during that year, but they did effectively adapt, evidently by their revenue in fiscal 21. So on that note, I'll leave it off to the Q&A.
Well, good. That's a nice quick overview. Thank you. A name we all recognize, Milwaukee Tool.
Yes.
When was that acquired, and do you know any of the history of how that became a part of Techtronics?
Yeah, so it was acquired in 2006, I believe, around there. I don't necessarily know how it was acquired, but Techtronic Industries started out as part of it was Sears, actually, to make a lot of their electronic hand tools and stuff.
Okay.
So they just kind of grew their space in electrical power tool and construction industry.
You know, this will be my last question, and we'll open it up for the floor. I see in the write-up you did talk about market share
Yes.
of Milwaukee Tool, and the report was it's what, one of the top 5 or something to that effect,
Yes.
with 10% of the market.
Yes.
Who are the others?
So there is Bosch, there is Black and Decker, Generac, and Deweth, I believe, are the top 5-ish.
Okay, all right. Well, good. Let's open up the floor right now for questions. We do have some alum here today, and so when they ask questions, we'll get an opportunity to have them tell us who they are, who they're working for, and what sector they covered when they were in the AIM program. Who's first? Basil.
With your company being part of the communist country of China, are the other companies in the holding dependent on the Chinese supply chain?
Yeah, so around 60% of the products are manufactured in China, and then 80% of sales are from overseas. So it does cause a little bit of concern, but they haven't, since 2019, they haven't had much problems with their supply chain thus far.
Let's stay on, if anybody has a supply chain question, let's stay on that theme just for a moment.
Sort of Ancon Canfield, Barclays, cover aerospace defense, and there's international materials, international banks, and whatever else.
Whatever we needed, right?
You just talked a little bit about kind of the price pass-through strategy and how much of that has come through versus sanctions, kind of sanctions previously, and then inflation now, and kind of what the delay or lag that we might expect around that.
Okay. First thing that you said it was pricing strategy?
Yeah, so pricing pass-through sanctions.
Yeah, sure. So a lot of it has to do with, I think they call it price skimming. What they're doing is they're releasing a lot of new innovative products throughout the year, and then that allows them to differentiate themselves from a lot of their competitors, and then they're charging higher prices with that. And in terms of inflation, I did increase my, check here, my risk-free rates. Excuse me, sorry. For Damadorian, I used their, where is it? I'm trying to see.
70 basis points.
70 basis points, yeah. Thank you.
I read that.
Yeah, that
To me, it
was
seems surprisingly low, a risk premium for China of 70 basis points. How'd you feel about that?
I think it's a little bit fair. I did add an extra 10 basis points just to kind of be a little bit more conservative about that.
Hal, do you have follow-up? I know you had several items there. Bill? I know you
Can
had
you talk a little bit about the first driver here? So I understand that, you see anybody building a home is got tools out there, hand tools out, but being a kind of an infrastructure play, not quite buying it, so convince me.
Convince you that
There's an infrastructure play.
I guess it's a housing play, but infrastructure is not building homes, it's building, big machines running, 10 miles of cement.
yes, a lot of part of the infrastructure will also do with like airports and public transportation, where a lot of their tools are being used. So like concrete saws, probably one of the biggest ones there.
I know we're gonna get another question, I'm the MC, so I get to ask questions. What's the useful life of those tools? How long do they last before they need to be replaced when they're in normal service? Do you know that?
I don't know that off the top of my head. I apologize if I can get back to you
Yeah,
on
check, include that in your buy sell, because there tends to be a replacement cycle.
Okay.
And if I'm using Milwaukee tool and I'm running a job site, I'm gonna probably replace it with Milwaukee tool. You know anything about that?
I have a different tactic question. I got it first. Is in the last 5 years, you go to Home Depot, they've gone from, plug-ins to now battery, everything's battery powered. So there's a huge transition in the last 5 years. Is there any way to recognize how much the market has been pushed by that change over time, or the getting rid of the old plug-in models to get into new electrical battery powered units? How that's affected long-term growth rate of the industry?
Yeah, so I know that Milwaukee Tool and RV specifically are mostly known for their cordless power tools. I'm not sure if I know off the top of my head how to measure that and the change that's made, but effectively that their sales have been growing with the release of their new lithium-ion battery in 2019. So that is a lot of the cause of their attractiveness of their products there.
All right, we got Rishi and then we'll do Alex. Rishi?
Yeah, great job, Zach. It's not your third driver. I know you mentioned that they're expecting double release of innovative products.
Sure.
Why such a low return on revenue growth? It's only 5%. Did you kind of forecast it out at all? And does that kind of speed up?
Yeah, so I want to kind of also look at historical before pre-pandemic growth rates because they were a little stagnant during the pandemic. And before that, it was around 7 to 11% each year. And I also kind of want to be a little bit more conservative just because of inflation, current geopolitical tension with China being right next to Russia. So that's kind of what my thinking was around that.
Okay.
Yeah, great work, Zach. Do you think this is more this company TTI? Is it more of a direction of a growth or like a maturing company? Because I'm getting kind of conflicting signals in this write-up on where you stand. So I was curious if this is a maturing company kind of coming into its own, or is it growing? Kind of where do you see the company going in 5 years?
Yeah, I'd say it's definitely more of a growth company. Just in the past 2 years, they've done a lot of expansion. Just a couple of things I have here. In 2020, they opened up a $650 million research and development facility and manufacturing plant in Vietnam. They have expand operations with a $100 million investment in South Carolina, adding about 500 new jobs there. And that's supposed to be finished in Q4 of this year. In Q3 last year, Milwaukee expanded its operations more in Mississippi, and then on the 20th of this month, they actually are opening a new office, or moving into the new office here in Milwaukee.
Can I ask a follow-up?
If it's short.
Yeah, so then why is revenue decreasing after 2023, like revenue growth decreasing, and then why did you price in a terminal growth rate of 1.25?
You're not suggesting a negative growth rate, you're suggesting a deceleration.
Decelerating revenue for a company that you're saying is growing with, or having a growth tilt with a 1.25% terminal growth rate, which would be more of a maturing growth rate to use, in my opinion, for your lack.
Okay.
So, so why, like?
Yeah, so in terms of that growth, actually, I'd like to get back in that question. I'm not sure if I have the answer right now.
Yeah, it should be in your model when you look at
Yeah.
the growth rate assumptions
Yeah.
for 24, 25, 26.
Yeah, so your second risk was rising interest rates. The company doesn't have a ton of debt outstanding as far as compared to equity, but can you touch on how much of that is floating and how much interest rate risk they have? Like, so how much of their debt outstanding is floating rates?
Yep, good question.
Yeah, so for debts, so around 35% of their debt is with fixed rate, ranging between 0.7% and 3.42%, and the other 65% is with a floating rate with 0.3% to 1.15%. There also is a currency swap interest rate there, with the fixed rate being 3.3%, and 0.52% as well. In terms of outstanding debt that's coming up that needs to be paid in 2023, there's a notional amount of 66 million in 2024, with 99 million. Q4 of 2024, 18 million, and then 2025 as well.
That's the traditional debt. Any capital leases? Any other long-term liabilities?
I believe there is. I don't have it.
Yeah, because the difference between, for me, when I look at ROA and ROE and I see a big difference, it suggests a lot of leverage, but it really doesn't show much up in the way of long-term debt. So let us know with your write-up this weekend the extent of other long-term liabilities or obligations.
Okay.
All right, well, good. Thank you, Zach, for going first today. Thanks, Rob. All right, off and running with our only domestic of the day. Chris, you ready to go?
I am.
Yeah.
Hello everyone, thanks for coming. So when it comes to screening for my company, tech can be kind of an interesting one because when you're looking at small cap, a lot of them can be negative revenues. So I wanted to make sure that my company had positive revenues with a growth rate that's also positive and also a pretty high ROIC. And I did that through FinViz. So that's kind of how I screened for the company. I ended up finding Power Integrations, and they had a very strong balance sheet and financials with a lot of potential for growth. So I kind of honed in on this company and really figured out that I like their management, I like their business, and I like what they've been doing in the past. That's how I chose Power Integrations. One of the questions that I kept getting asked in D2L was about my 400 basis point increase in 2022. I would like to clear the air on that. The 400 basis point jump is because of they're introducing 2 new revenue streams, which is in my second driver. They are getting into EVs and the Internet of Things / appliances. So that is driving those revenues. And also management has kind of given some guidance along the lines of their gross margins. And I actually was a little bit conservative on that. Most people predicted their their operating margins to be about 30%. So I went down to 1% just because there's a lot of global tension and a lot of supply chain issues. So I just wanted to be conservative with that. I guess with that, I'll open up the floor to Q&A.
All right. A tech company, questions? The two of you, Basil, we'll go with you first.
Yeah, with the risk of their protection for IP, have they done any strategic change in attorneys for the IP protection?
Yeah, so as my write-up does state, they did have a lawsuit that was a 15-year lawsuit, actually with one of their competitors that I have in my peer evaluation on semiconductor. It was originally Fairchild Semiconductors that was acquired by On Semiconductors, but it was a 15-year lawsuit, and the leak came from a former employee that ended up working for Fairchild, and he used some of the intellectual property. In terms of what they've done to prevent this in the future, management, I really tried to dig and figure out if they had like specific comments. They didn't have specific like actions they did. You know, they did talk about how they're making sure when their employees leave the company, they are protecting their IP, and also that they have stated that they're willing to spend the money for lawsuits if this were to happen again.
Yeah, I just have a question about your WAC. I want to know your assumptions there, considering they have no debt. Also, have they, as a follow-up as well, has the management team said anything about issuing debt in the future?
Mm-hmm. Just to quickly touch on the debt, they haven't had debt since 2008, and management says they do not want to take on debt, especially with rising interest rates currently. There's no reason to. They can fund all their operations through their cash flows, so there's no reason to add on extra debt. And for my WAC, obviously, I didn't have any cost of debt because there was no debt. So I went with a risk-free rate of 2.5. And and then a long-term market return of 7%, giving me a market premium of 5.5. And then for my my beta, so I actually calculated my beta and it ended up giving me a 1.15 beta, but I searched the internet just to see what other people had, and I saw 6 sources with a 0.99 beta, so I decided to go with that just because there has been a lot of fluctuation in the price from Q4 of 2021 and a little bit from the correction in 2022, beginning of 2022. So I decided to go with a 0.99 beta.
Yep, you're good with that. Bill?
The new product is coming in 2022 for EVs. Can you drill down a little bit more? How much detail did you have on that product and how particular that product is? Is it better than what they have already in early EVs, or what does it do that's maybe so special and makes it game changing?
Yeah, so a big key pillar is energy efficiency for the company. So one of the main things that this new product can do is it takes less amount of electricity to excite the electrons to a level that they can conduct energy. So it minimizes the energy needed for these chips to perform. And then for guidance and like what they said about new products, it's brand new, came out in February of 2022, so they don't have much guidance on where they believe they're going to be able to sell the product and how much they're going to be able to believe, or how much they're going to be able to sell. But they have mentioned that they're in talks with 7 of the top 11 auto manufacturing companies that would buy their chips. And these are not all wins, but they are in talks and they're very confident.
Follow up?
Yes.
Do they sell already to existing auto manufacturers?
They do not.
Colin, what do you cover?
So I'm not aerospace defense, but lead coverage for government services and wrapping on space. Can you just talk a little bit about where they source their chips and kind of if it's an indigenous Chinese supply chain for chip manufacturing, or if they source from South Korea, Japan, Taiwan?
Yeah, most of them are from China. They get a lot of their wafers. Their 3 main suppliers are Epson, Lapis, and XFab. And all 3 of these companies are pretty well-known companies with great reputations. And we also have long-term contracts, with the first contract expiring in 2025. But we do have clauses that we could terminate those if they were not to provide those. But short answer to your question is most of them come from China and Taiwan.
Okay, any follow-up? 10-year DCF. Tell me a little bit about your valuation.
So I originally had a 5-year DCF, but I realized that I couldn't really capture the full introduction of the 2 new products and the 2 new revenue streams. So I wanted to move to a 10-year DCF so I could capture all that growth.
Okay, sorry, Rishi, if I hurt your feelings. You're now.
Okay. Yeah, great job, Chris. So I noticed in your peer boxes that 2 peers give you upside and 2 give you downside. Do you ever consider doing like a PEG ratio? You just differentiate the growers versus the more stagnant businesses.
Not really, just because the semiconductor industry has seen such a bump in the past 2 years.
And then maybe as a follow up, why are Monolithic and Allegro your best peers or so, more so than the other 2?
I had
Well,
are you talking about waiting?
Just relative to evaluation.
So to kind of go off that, I did a peer eval without Monolithic, and I still received an upside of about 21.13%. So
awesome.
So I took that out.
We've got another alum with us today. Thomas, why don't you introduce yourself?
How's it going? Tommy Martinez. Graduated last year. I worked for JP Morgan, the private bank. When I was in AIM, I covered domestic financials, and I dabbled with international tech. That didn't really come to fruition, but it's another story.
He's in Denver right now.
Yeah.
How cool is that?
It's cold.
Yeah.
But it's beautiful.
Yes, it is.
Can you clarify more on the revenue stream? Do they sell semiconductors, or are they being bought by manufacturers who are then putting them into products? Because I see a majority of this is coming from Taiwan, China, South Korea, Asia.
So their actual product or products, depending on the end market, but their product that that they develop actually goes into a semiconductor. So that's why it's all the revenues in China and Taiwan, sending it to those manufacturers.
So like, I kind of want a little bit more clarification. Like when you say 7 of the top 11 top automakers in the world, if they were to go with this product, is the revenue coming from Volkswagen or is it coming from the manufacturer of Volkswagen?
It would most likely be coming from the OEM, the original equipment manufacturer of Volkswagen.
Thank you.
Okay, good. Other questions? We're not done here yet, okay? Lots of price volatility recently, okay? A little bit of a rebound, et cetera. Have you looked at the peers and have they exhibited similar market volatility?
Yeah, I think they have exhibited similar market volatility. I think the whole tech industry just kind of had a major correction in the first month and a half of 2022. And I think, well, depending on the whole global tension and politicals, I think we'll start to see a rebound in the semiconductor tech industry.
So I know online this was asked and you responded, but I think it's fair, we can't deny what's going on right now over Russia, Ukraine, and the whole. Does this pose any type of additional business risk versus when you first looked at this company a week or two ago?
Yeah, so I do think it does impose a little bit more risk, especially with the risk. I mean, we all think of the risk of China invading Taiwan and taking over that land. So that does impose some risk. But I also think the tech industry is such a big part of China's economic growth and GDP that they will have this in their best interest to continue to grow their economy.
I think this will be an interesting comment, Colin.
I'm not going to talk about Ukraine. We talked about capital deployment strategy and kind of what deals they've done recently and how that integration is going.
Mm-hmm. They're very private on the exact deals they've done. I tried to figure out some of the contracts and past deals that they've done, and I had a lot of trouble actually figuring out specifics. A couple of companies that they work with, two that are very well known are Anchor, which does like the charging ports and all that, and then Belkin. Those are two massive companies that they've been able to have long-standing contracts with. What was the second? Do you have another
That's
part?
good. That's it. So, good.
Great, very good. Thank you much. We're halfway there. Joseph, we're going to do international material, huh?
Correct.
Yeah.
Hello, my name is Joe Anason. I'm a junior covering international materials. Today, the company I'll be pitching will be Euro Copper. The first starting off with my screening process, I wasn't able to really do much on backsets, and so I was really going off the thesis of I wanted to do some of those commodities, particularly was copper. So the first company I looked at was First Quantum. That was kind of picked out just because they're like one of the larger copper industry or miners, and through a couple of talks with other people. But further looking into the company, it looked like that they were already priced in what they were expecting, and there wasn't really much upside. So I started looking through like their comps and other potential copper miners, and I came across a small one called Euro Copper. They have operations in Brazil. They're Vancouver, Canada is where the headquarters are, but they have two mines, and one's going to be starting construction in Brazil. Just to kind of go on to questions on D2O, some of them I'm assuming will come up again, but one of them was just kind of talk about my peers. So my peer group, I chose mainly, I was looking for other copper miners that were doing mainly their operations in the Americas and try to solidify those in South America. However, I was not able to get that fully in with, as mentioned in the D2O, SCCO is an American one. They do have operations in South America, but because they're American, they typically have a little bit of a premium, so I rated them a little bit lower to kind of counteract that premium that they have. And yeah, that was, then just one quick adjustment on my peer valuations. For ROE and ROA, the peer averages, the ROE should be closer to 15, about 14, and ROA should be closer to 6. That was all the other calculations for peer averages.
Okay, very good. Joe?
Yep.
Copper.
Thanks.
how closely is the price of this stock tied to copper prices?
It's highly correlated. When I did like another square, it was like 99. So over time, you will see the fluctuations. However, with their fluctuations, their cost of production has been relatively stable and it has been declining.
So, not surprising, copper company tied to the price of copper. What is the largest global economic driver that affects the price of copper?
The largest global would probably be the global GDP. I did a correlation between copper prices and global GDP, and it's about like our square was about 50.
Okay.
A little bit above 50, I think.
Okay, and that's global industrial production you did. Did you look at that specifically to any of the
I did
economies they
specifically
serve?
to Brazil. 50% of revenues go to Brazil, and there was a higher correlation between Brazil does have a high focus with commodity prices to their GDP.
And none of this is surprising since it is a materials company,
Yes.
right? Okay, questions? Basil?
Yeah, do you see a potential risk for your company being that Brazil is politically unstable, having somewhat volatile political history that like still today remains persistent even to this day?
Yeah, regarding like political history, yes, there has been instabilities. They've been working to stabilize that a little bit. In order to I added 200 basis point to my WAC as a risk premium to kind of counteract, to kind of adjust that into factors. I have not seen any specific impacts to the company as of yet because of instability.
All right, so let's go back to copper and gold. Like we should
Yeah, we do have a 19.5% revenues from gold.
So we know the thing with commodities and precious metals that we can look at the futures market.
Yes.
Did you look at the futures market and what is the futures market telling us, at least now the expectations are for copper and gold?
Yep. So I looked specifically at mostly at copper commodity futures because that's where most of the derivatives, most of the revenue is going to derive from. I looked at the futures. I looked out up to 2025, and what the futures is saying that it's going to be relatively flat, will slight increase during 2022. Then 23, 24, they're projecting that pullback a little bit in price, in copper price, and then I reflected that in my model. And then for years, and I did 10-year DCF, so I did for 26 to 2030, I ran, I just used forecasted, my own forecast, and was declining percentage on copper prices.
So I know the answer, but I think we should talk about why, again, a 10-year DCF.
Yep. So a 10-year DCF, they're opening a new mine, starting construction in Q2 of 2022. It was production starting in end of Q3 of 24, going into 25 is when full production is going to start. So I wanted to capture those first 5 years because management has, on this project plan, they want high payback, high RR. And so the first 5 years of this mine are going to be high production, get that faster payback revenue, and I wanted to capture that.
Okay. Yeah, good job, Joe. So I see in the write-up, you said 90% of their electricity is provided through renewables.
Yes.
How long have they been using renewables to, I guess, generate their electricity? And then when that was implemented, do you know kind of how that affected their margins?
Yeah, I believe, as far as I know, they have had this implemented ever since Euro Copper took over. So MCSA and Anason gold mines were around before Euro was. Euro acquired them in 2016. And so from my understanding, the transition probably around that time, the renewable energy is coming from the Brazilian electrical grid. The Brazilian electrical grid is already 80 to 90% on renewables. So they're just deriving it from that. Which, yeah.
All right, questions? Colin?
It's pretty cheap versus peers, and
Yes.
if you think about kind of capital projects of what they're looking at through 2024. So if we think about kind of the financing needs and you know, what the demands are for the projects, you know, what is your kind of view on where they expect to get capital from, and you know, how much capital should they need?
Yep.
Versus internally funded cash flow.
Yeah. So just clarify was on where they're getting funding for the project.
Yeah, just capital needs.
So this year they're issuing $400 million in fixed rate, 6.5% fixed rate debt. So what they're using that capital is going to be split off. $125 million is split off to pay off their outstanding debt that has floating rates. which I find was very smart because the floating rates was up to 4.25% plus LIBOR. So that was inflationary. I think fixed rate was better for that. Then they're going to use a mix between internal revenue or internal cash and about, I think it was between about 200 million of that for the funding of the new project. The leftover cash was going to go to their other expanding projects at their current lines.
Got it. And just going back to the relative valuation, kind of what's the risk that we're not seeing here or that the market doesn't understand?
The risk, well, it's a smaller company. Their assets that they have is comparatively to like it was under I believe $1 billion in assets, whereas for most miners they're way above that and they're generating a lot more in revenue, just size of scale essentially.
Sure.
So they're essentially a growing beginner.
Just to take me through your model a bit, did you do your model in dollars or in reals?
I did it in dollars. As a company functional, they reported in dollars.
Canadian
their
or
own
US?
translation. What's it?
Which dollars? Canadian?
Oh, US dollars.
And just to make sure, just as a moment, if you have a company like in Brazil where the exchange rate is weakening, if you look at the futures, it's expected to be perennially weak over the next 5 years. So
Yes.
if you kind of embed, if you just put in dollars, for instance, I know they're functional, but the model is that the impact is that you're saying, you're really impacting saying that the local numbers are going to be really gigantic because they have a negative, very negative
Yes.
currency dynamic. So that's, just be careful of that because you're implicitly saying that their revenues are going to really expand dramatically in the local currencies. So just be aware of that. So one question on your valuation. You took your valuation using a PE of 10.23, which is that a forward number?
Yes, that's a forward number.
Okay, just be careful because you use a 2021 EPS with that number. You should be using the 2022 number. EPS.
Yeah, the forward would be 21 forward.
21 is passed.
A lot of them haven't reported their 21.
I read the relative.
Okay,
Forward
forward would be 2022. Yes. I'll make.
All right, so you get to do a little educating. This is the first time we've looked at or seen a price to net asset value.
Yes.
And
So it's price to net asset value is common ref for a materials company, just because what's the price of earnings or other valuations that incorporate revenues. Since our revenues are highly correlated to commodity prices, if there's large fluctuations, that's going to throw the numbers off. The net asset value will kind of insulate yourself from those commodity prices, and then you can get a little bit closer to like what book value is.
that's a common play we use with materials that are closely related to commodities. Any other questions out there? Management?
Yep.
So, again, unusual, a Brazilian company, Canadian or Vancouver location. Why Vancouver, and talk about the management?
Yep. So the CEO, I believe it was David Strang, and so he previously worked for a different copper, Lumina Copper, until they were bought out. So then he and David Strang, or Christopher Dunn, they both co-formed a Euro Copper, and basically what they went in and they acquired MCSA and NX Gold, getting majority interest control over it, and basically found those mines were not running efficiently, and they basically revamped the efficiency of those.
Good, last chance. Anyone else for the question? You got it, Joe. Thank you. All right, we'll continue to move right along. Now we're going to do another international. And we're back to Brazil. 2 Brazil in a row.
Yeah.
Hello. Technically, it's a Canadian firm, but we know it's Brazil. All right, Jay.
All right. Thank you all for coming today. My name is Jake Bernarde, and I'm a junior in the Applied Investment Management Program. And I cover the international consumer staples sector. Today I'll be pitching JBSAY, ticker JBSAY, with a price target of $18.60 and representing an upside of 28.7%. So in my screening process, I was looking for a company with a PE that was less than 10, and a dividend yield that was above 0, and some positive growth in earnings over the last 5 years. In doing so, I came across a couple of interesting companies, but unfortunately, they didn't have an ADR. So those companies are African and Indian companies. So after that, I soon found JBS in the same screener. And initially, I was very interested in the company due to its diverse product offerings and its large global footprint, along with the metrics I listed before. So, and then one correction I want to make to my peer table in my write-up. The valuation averages across the weighted average across the bottom is, it wasn't a weighted average, so it was a 25%. So to make an update there, it would be PE would be, or first average market cap would be about 17 billion. PE would be 10 times. EV to EBITDA would be 6.68, and then price to sales reports 5.7, and price to book 3.15. But just to clarify there, in my valuation section, those numbers are correct. Just in the box, it's incorrect there. So, and then one question that came up a lot on D2L was the company's high dividend yield. And so the company has they have a minimum mandatory dividend of 25% of their net income. So this has led to dividend fluctuation over the years, especially as their net income has fluctuated. But in the since 2019, it's brought high dividend yield for shareholders. For example, in 2015, which was the last really profitable year for the company before 2019, the company made 4.6 billion in reals, which comes to about a little under $1 billion in US dollars. And then with this, it distributed 25% of those, which would be 1.1 billion in reals. And then this is a similar trend. In 2021, the firm paid 4 dividend payments worth in total $1.20 per share, which represents about an 8.5% yield. So with that, I'm happy to open any questions.
Right out of the lecture this morning, we couldn't use the dividend discount model for this, right?
Yeah, we could not.
Yeah.
I had some questions on that on D2 as well. That's kind of what's coming up.
Good, lots of hands, let's go back there.
Yeah, great job, Jake. I see it's a Brazilian company, just like the one we just heard from. Pretty low whack considering the somewhat instability in Brazil, in my opinion. Could you just kind of talk about why your whack is that low and what your assumptions?
Yep. So it's a 40 to 60 debt to equity ratio, and at the end of the day, it's a meat packer, so its beta might not be as high as you think, at just over 1 at 1.04. So given that, and even while being based out of Brazil, I think you might think that's low, but I also pulled a country risk premium of just under 3% from Deneweth and added an inflation risk of 1% as well. So that's about 400 bips of premium there on the WACC. And I guess in my conversation with Dr. Wall as well, I could probably cut that risk premium in half, just given that I did my DCF in reals, so that currency risk is kind of modeled into my valuation. So I guess if my WACC was 50 bits lower, it would be a price target of about $18.50, and if it was 50 cents higher, so at 9.5, it would have been a lower price target around $16.50.
A lot of hands up here, we're gonna go with our guest. Thomas?
Kind of a multi-parter, You've got a WACC that's higher than your ROIC, so the company is losing value. You've got operating income that's expanding or rising at a higher rate than revenue growth, so it's becoming more efficient. What is the company doing right, but what is it also doing wrong?
Yeah. So first with the ROIC question, may have been a little of a miscalculation there, being that it's a Brazilian company, and that's more of a 2020 number, so I should have put a 2021 number. And going off that, they've been investing a lot, using a lot of capital expenditures to fund their acquisitions. And they've had nearly 20 acquisitions since 2019, so that's a big part of that ratio being lower there. But going along with that, the ROIC projected for 2022 is going to be closer to 18%, and along with the other numbers on. So they've addressed the issue, but yes, that indicates that they're investing in things that weren't profitable. But I think those things are becoming to fruition in the next five-ish years. So 5 years.
We're gonna go with new hands right there.
Yeah, Jake, great job. I'm kind of jumping ahead a little bit, but I'm curious, just because I also covered the same sector, obviously.
But what stock are you looking to sell if this does get in out of our portfolio? You looked into that at all?
Yeah, I did a little bit. So a lot of the holdings in our portfolio for consumer staples, international consumer staples, are also food related, but they're also, most of them are in Europe. So that's kind of why I wanted to target a different market. And going off that, Danone was the main sell I came across between the few, mainly because they're also a competitor of other peers that we own, including Nestle and Diego, we both own. And they have a less diverse portfolio than those two companies, and they're kind of smaller overall. And with that, they kind of show the ability to not really expand their margins like those competitors do, just because of their scale and size. And along with that, they have premium portfolios that Danone just doesn't really have access to. So I think, and the declining stock price over the last couple years.
So we've had alumni ask questions and seniors. How about a sophomore? Huh?
Yeah, software in between.
You gotta get in the house.
High schoolers next.
Agree right up, Jake. From 2010 to 2020, they only had 1 year with an operating margin above 5%, and sustained above 8% operating margin going forward.
Yeah. So their operations have changed a great deal since then, and especially surprisingly post-pandemic, their margins have been very steady. This is alongside the really favorable market for prices, and for commodity consumption has also grown, along with one of my drivers about the product line diversification. That's kind of mitigated some of that risk, and while also mitigating the risk, it's helped them expand margins in more premium brands, such as their fish segment or in others, new segments like that. But.
Great, thank you.
Oh, you saw it this time.
I saw it.
Yeah, so can you just run through and add those 400 basis points of premium to your WAC? Because without it, you would have a WAC of 5%. And can you maybe talk about a bribery case that occurred in 2020 with your company?
Yeah, so for the WAC, I added that to the cost of equity. Is that what you're asking for, like where I added it in my DCF? Yeah, so I added on the end of, so I did my risk premium and my risk-free rate, and then I added that 4% on the end of that.
Okay.
Which got me to a cost of equity of 11.6%.
Okay.
And then regarding the case of bribery, so the Batista family, which is the majority owner, 40%, has had some governance issues over the years, and this is one of the issues. And so in mid-2020, the parent company, JBS, which is JNF Investimentos, which is the brothers or the family's fund, they were fined for like $250-ish million for bribing Brazilian politicians to advance their interests, I guess. And I guess that's kind of been the end of that. But the one good thing that came from that is just higher. They've set themselves a greater. They've moved up with new CEO and CFO since 2020, and also they've had global anti-corruption initiatives enforced, which kind of sets under that global standard and hopefully avoid issues like that.
Alex, and then we're going to move over there.
Yeah, just sticking with that kind of ownership, governance, BNDES, obviously they're divesting their stake a little bit, but they're the ones, from a little bit of research, they're the ones setting that 25% dividend policy. Is there anything else like attached to that ownership stake by the Brazilian state-controlled development bank that would pose a risk long-term?
I touched on this a little bit in my write-up, but just the fact that there could be a little bit of a share hangover or stock hangover if the shares were sold on the public market. But as of so in February, mid-February, so not too long ago, less than 2 weeks ago, they did divest. It's part of their plan of divesting from publicly traded companies. So this didn't really come as a surprise to the company or any shareholders, but there's a block trade. They put the shares on the Sao Paulo Stock Exchange, but these were most of the shares all the shares were taken up at a 3% discount from the market trading price at that.
Would that change their dividend policy or anything that they're currently doing? Because it seems like this bank sets some pretty high standards. I mean, a 25% dividend payout. Will that change? And is there anything else attached to that agreement?
Yeah, so like I said earlier, that their net income has really grown a lot, especially since 2019. So it could it could be a factor in the future, but as of now, their stake is still right over 20%. They still have a lot of stake in the company, and they aren't even the majority share or owners, and don't have as much representation on the board of directors. So I don't see this policy changing as much going forward, but it definitely could happen in maybe 5 to 10 year range.
Okay, we're having a good time. We're going to keep going.
Great job. I was just curious, could you just follow up on the governance and the corruption scandals? Could you just kind of talk to your confidence in management and kind of how the CEO was appointed? Where's the Batista family involved in that?
Mm-hmm.
And then also with the CCC ESG rating, could you just talk about that a little bit?
Yeah. So the majority, or the company's actually been doing very well environmentally with some new technologies, but the majority of that's ESG rating, as I found, was from that governance, that weakness in governance. And so in the past, they've had issues, like I said, with corruption. And I guess one other thing, along with that anti-corruption policy that they've undertaken globally, the firms went under 190,000 training sessions for team members around the world, just to solidify that. Also, just kind of going into the history a little bit more. So Joesley and Wesley Batista are the son of the founder of the company, founded in 1953, and they were the majority shareholders under that JNF Investidos fund. And so like I said, their issues in the past led them to being the board of directors to remove them from higher up executive positions. So I'm really confident in new management based on both their performance over the last 5 years and their ability to buy meaningful acquisitions since then, and also marginal growth. But also another important thing I want to add to that was in September of 2020, BlackRock, who's positioned itself as a leader in the ESG criteria industry, or like in their industry as an ESG criteria, and they invested $334 million or 1% stake in the company in JBS. So this kind of goes off like and along with that, they've brought high activism within the firm, especially compared to other institutional investors who have aimed to bring transparency to, I guess, those issues and I guess the lack thereof. Also, all these factors kind of have evolved in the last 3 to 5 years with their ESG initiatives.
It's almost like you were ready for that question, huh?
I mean, I had like 6, 7 of those.
Yeah.
So I was ready for it.
Did you look into what their ESG was prior to this happening? Just curious.
Yeah, I mean, they're CCC, so you can't get much worse than that. So.
No, but like before.
It was CCC before as well.
Good, you get the last question.
Question of natural gas is used in the process for processing protein. And obviously prices have skyrocketed dramatically in natural gas. What kind of impact do you anticipate this company to have from natural gas prices?
Yeah, so that's kind of part of that. So as the prices of per commodity or per capita prices, or not per capita, but as prices went up per pound of beef, pork, and poultry, so have kind of like the costs, like gas, like
passed along the costs.
Yeah, so they kind of passed over it, along with like grain and other things that have, but they kind of instrumentally.
We can't let this go. Is there any blockchain?
Yeah, that's fine.
Okay, good. Then you can ask it.
No, we can't let it go.
You're good out there. So I see that your company is implementing blockchain, and what's the estimated completion of that?
Yeah, so they launched a blockchain in mid-2021 to support their and monitor their suppliers. The company is focusing on especially cattle breeding, and which has been a concern, especially in the Amazon biome, which is deforestation, and that kind of those issues have been a concern. But so they plan to utilize this platform to kind of create levels of traceability within their suppliers, being that they would have over 60,000 individual suppliers. This is really hard to track, and this blockchain technology kind of would revolutionize that whole process. Also, management has said that their suppliers they plan to push this for their suppliers to be on the platform by 2025.
All right. Jake, thank you very much. So here's the process. These
four presenters will come up and we'll talk about their buy-sell recommendations, right? And then tomorrow morning, all of you will get any update information on the material that was presented today with the recommendation for a sell. And then a ballot will go out at noon. And the juniors in the program, the class of 2023, votes. And we need a supermajority to conduct any type of transaction that generally occurs on Monday morning. So that's the process we follow. Everyone enjoy the weekend. Marquette weekend with a lot of alumni back. Looking forward to maybe a victory over what? Butler? Butler. Yeah, beat Butler. All right. Have a good weekend. All right. We'll do by